$9.1 billion. That is what Anthropic, one of the biggest AI labs on the planet, just agreed to pay a Bitcoin miner. 20 years of rent. Today, 4 crypto stories, 3 macro, 4 AI. And at the end, how a Bitcoin miner became Anthropic's landlord, and what that tells you about what is actually scarce in this economy. Crypto's biggest trade of the week was not a coin, it was a power contract. 1. Riot Platforms, one of America's largest Bitcoin miners, signed a 20-year lease with the AI lab Anthropic. 191 megawatts of its Rockdale, Texas campus. Around $9.1 billion contracted, reported north of $16 billion with extensions. Morgan Stanley put up $573 million to start construction. Riot stock jumped 17% in a day. Here is the part that matters. Riot lost $237 million last quarter mining Bitcoin. The grid connection, not the Bitcoin, was the asset. 2. The ETF bid is back. Spot Bitcoin ETFs took in $853 million in a week, the most since mid-April. $693 million of it went to BlackRock's IBIT alone. Inflows have now run 6 straight days. BlackRock also cut IBIT's conversion minimum from $25 million to $1 million, opening the arbitrage door to smaller desks. Keep the frame honest. These funds are still down around $4.5 billion for the year. This is re-engagement at 64,000, not euphoria. 3. Russia just made crypto an official retail product. The central bank approved Bitcoin, Ether, and Tether for retail trading through licensed intermediaries. There is a risk test and a cap of 300,000 rubles a year, around $3,600. XRP did not make the list. A sanctioned G20 economy is not fighting the asset class anymore. It is metering it and deciding which coins qualify. 4. The corporate Bitcoin treasury model just got marked to market. Trump media reported a $238 million quarterly loss. $190 million of that was an impairment on its Bitcoin holdings. Actual operating revenue, $1.7 million. This is the treasury playbook in a drawdown. Buy with shareholder money at the top, write it down on the way down. Bitcoin is off 46% in a year, and that loss is now landing on corporate income statements. Bitcoin is pinned at 64,000 in its tightest range of the year. ETF money is back 6 days straight, and the biggest crypto trade of the week was not a coin, it was a power contract. That's crypto today. Inflation cooled again, and the Fed still cannot decide if money is tight enough. 1. The July CPY, up 0.1% on the month, 3.4% on the year, down from 3.5. Core inflation came in at 2.5%, the slowest since March of 2021. Shelter drove 2/3 of the monthly gain. Gasoline fell almost 3%, and the market's answer to the friendliest inflation print in 5 years, the odds of a September rate hike barely moved, still roughly a coin flip. The Warsh Fed is debating a hike, not a cut. Whoever wins that argument reprices every mortgage and every bond you own. 2. Oil is at a 2-week high because the Strait of Hormuz is back on the table. Talks between Washington and Tehran stalled over new compensation demands. Brent crude hit $88, US crude $82.50, both up around 5% on the week. Roughly a fifth of the world's oil moves through that strait. Here is the link to your wallet. Energy prices fell in the July inflation report. This rally lands in the August number 2 weeks before the Fed votes on that hike. 3. Gold does not believe the calm. On a day inflation printed tame and stocks drifted higher, gold rose again to $4,400 an ounce, holding near record territory. The 10-year treasury eased to 4.65%. The dollar index slipped under 100. When the safe haven bid stays this strong through a soft landing tape, someone large is hedging something. The rate path, the straight, or the deficit. Core inflation at a 5-year low. A Fed still split on a hike, and gold at 4,400 anyway. PPI hits at 8:30 this morning, retail sales tomorrow. That's macro today. The AI build-out stopped being a forecast. This week it showed up on income statements. 1. Anthropic, the company behind the Claude models, is preparing to go public this fall on the Nasdaq, with a debut reported as soon as October. Bankers are lining up investor meetings while the company signs multi-billion-dollar, decades-long compute leases. The exact valuation stays unconfirmed until the filing prices. The talk runs toward the high hundreds of billions. The real shift: an AI lab's build-out bill moves from private venture money to a stock your retirement account can hold. 2. Google's Gemini crossed 1 billion monthly users, the fastest any Google product has reached that mark. Per the reporting, it generates more than 150 million images a day, and 63% of users talk to it by voice. Distribution is the moat money cannot buy quickly. Every AI company writing an IPO prospectus has to answer one question: who actually owns the user? Google just answered with a number. 3. The AI coding gold rush priced 2 more companies. Lovable raised $400 million at a $13.3 billion valuation less than 2 years after launch. Downstream, testing startup Blacksmith raised at $550 million, 10 times its valuation from under a year ago, on $10 million of revenue. That is a 55 times revenue multiple. Markets are pricing trajectory, not earnings. That math works while money is cheap, and only while money is cheap. 4. Foxconn, the company that assembles your iPhone, is now an AI company. Quarterly profit rose 35% to around $1.9 billion. AI servers and cloud hardware crossed 51% of revenue, passing consumer electronics for the first time in the company's history. The iPhone side is down to 29%. The world's biggest electronics assembler now earns more building AI infrastructure than it does building phones. 1 billion users, $13 billion coding startups, and the iPhone assembler now makes most of its money on AI servers. NVIDIA up 3%, Supermicro and CoreWeave up 19%. That's AI today. The day's biggest story is, on paper, a real estate deal. Riot Platforms spent a decade becoming one of America's largest Bitcoin miners. This week it became Anthropic's Landlord, and the fine print tells you what is actually scarce in this economy. Some context. Bitcoin mining is a race to find cheap electricity. Riot won its heat of that race by buying land, power contracts, and grid connections in Texas and filling the buildings with mining rigs. Then the AI boom arrived, and every AI lab on Earth needed the same 3 things at once. Massive power, connected to the grid, available now. A new grid connection can take years in the queue. The miners already hold them. The timeline: 2023 through 2025. Riot builds Rockdale, Texas into one of the largest mining campuses in North America. Early 2026, the pressure shows. Riot sells over 3,700 Bitcoin in the first quarter, then posts a $237 million loss in the second. May, the chipmaker AMD becomes Rockdale's first AI tenant at 25 megawatts. August 11th, Anthropic signs the anchor lease, 191 megawatts, 20 years, around $9.1 billion contracted, reported north of $16 billion if the extensions hit. Morgan Stanley provides $573 million in interim financing. First power December 2027. Riot stock closes up 17%. Now the financial angle. Who decides? Whoever already holds energized land and power contracts. That is why a money-losing miner suddenly commands 20 years of rent from a top AI lab. Who pays? Anthropic's investors, the same investors being courted for a fall IPO, funding decades of capacity ahead of profits, and eventually, everyone who shares a grid with gigawatt-scale tenants. What changed? Mining Bitcoin stopped being the highest value use of a megawatt, and the market said so with a price. Notice what the market did not do. Riot's mining peers rose only about 2% on the news. Investors are paying for signed contracts, not for the story. That is the discipline worth copying. In a gold rush, the surest money was never in the gold. It is in the ground, under the diggers. Riot just sold 20 years of ground. So here is the question I keep coming back to. When a Bitcoin miner earns more renting its megawatts to an AI lab than it ever earned mining Bitcoin, what was actually scarce all along? The coins, the compute, or the power? I genuinely want your read on this one. Tell me in the comments. Blue pill, inflation is grinding down, core is at a 5-year low, the hike never comes, and the AI build-out is a productivity boom that pays for itself. Buy the index and ignore the noise. Red pill, the build-out is absorbing the real economy's scarce inputs, power, grid, capital, funded by valuations that assume money stays cheap, while the Fed is a coin flip from making it dearer. $9.1 billion says the repricing already started. The timeline keeps moving. We will see you in the next one.